The broadcast is now starting. All attendees are in listen-only mode.
Hi, good morning. We're going to get started in about 5 minutes here. We're just going to give a few more moments for everybody to log in.
All right, we got about 2 minutes to go before we're going to start. We're going to give a little bit more time for a few more people to join. Those that have joined, thank you, and we'll be with you in just a second.
All right, well, good morning and good afternoon to our friends on the East Coast. Thank you for joining us and welcome to this Outdoor Industry Association member partner webinar with Altus Receivables Management. Altus is a longstanding OIA member and also a business savings partner, which means that any OIA members are actually eligible for discounted rates on our services. But today's webinar is entitled Overcoming Challenges, Collecting in the Outdoor Industry Amidst a Global Crisis. So for anyone unfamiliar with GoToWebinar, we do encourage you guys to interact with us throughout the presentation by sending over questions through the chat feature. Really important though, please just make sure that when you do have a question, you direct it in the chat feature to presenters and organizer, and that way we'll be able to see it. So feel free to type in your questions or thoughts whenever they come to you. We would love for this to be a really collaborative session, so we plan to address those questions towards the end of it as time allows. And without any further delay, let's go ahead and get started. So just a quick bit about who we are. My name is Leah Skye.
And my name is Dan Grenemeyer.
And we are coming to you from beautiful Denver, Colorado. We've been working as receivables management specialists, assisting companies with credit and collection issues, specifically with a high concentration in the outdoor industry for honestly the better part of the last decade. I see many of you guys are already current clients who participated in our last OIA webinar, so welcome. But I also see a lot of new names, so welcome to you as well. Working in collections, and really specifically with so many companies like yours, we've seen so many ups and downs in the seasonal industry, from horrendous snow seasons and wildfires to, of course, what we're experiencing now, a global pandemic, essentially shuttering stores and throwing sales and payments to a halt. So I know that the last 12 weeks or so have been extremely challenging, to say the least. Being in collections has given us really some interesting perspective on the issues surrounding payment recovery. Right now, during a time when most of us would normally be getting excited and gearing up for Outdoor Retailer Summer Market, instead most of you are looking through your unpaid invoices and trying to determine the most ethical way to approach your customers. So now more than ever, we really just want to make sure that the work that you've been putting in all year to innovating and selling incredible products isn't quickly derailed by COVID-19, turning your profits into bad debt write-offs. So please understand, our objective is not to sell you on Altus services, but rather to just give you some tools and suggestions to minimize your losses and maximize the dollars put back into your businesses. Of course, none of us could have predicted this pandemic, but hopefully some of this information will help you find yourself better prepared for crises in general going forward. Not that I hope this ever happens again, but Dan and I are, of course, available on a totally free consultative basis to help guide your AR team in the right direction. And of course, we'll provide all of our contact information to all of the attendees on this call. So we have a vast range of companies on this call, ranging from multinational billion-dollar brands down to mom and pop operations of only a couple people that sell locally. So it's really been interesting to see how this unprecedented event really brings us all together, because companies of every single size are having very similar concerns. And the big issue that all of my clients are talking about right now is that cash flow is tight for them, but asking customers to pay is a really sensitive topic in the current climate. Dan and I started working with OIA several years ago when we recognized that there really was a need in this tight-knit community for some assistance in navigating that very, very delicate line between a debtor and a customer. You all know this is a really uniquely tight-knit industry, and more often than not, your customers are also your friends and your peers and your buddies that you go hiking and rafting with. But at the end of the day, you are running a business and you do still need to be paid. So always, and especially now, when a customer cannot or will not pay, you are faced with a dilemma to take on. Do you shoulder the burden for your customers and, for example, carry their balance through the next season, or do you risk alienating them by demanding that they keep to their original payment terms? Over the last few weeks, I have had many conversations with a lot of my clients that are struggling with just that, how to approach their customers for payment given the difficult situation that we're all in. The short answer is there really is no foolproof solution, but there are definitely some ways that you can navigate this to focus on your biggest areas of concern and just make sure that your limited staff is being as efficient as possible. We do truly understand the sensitive nature of this. Most of these retailers were shut down abruptly, many of them small businesses, and many of you on this call were left with open invoices to collect and no way to even reach your customers. I know that collections as a whole is a really touchy subject, but hopefully you decided to join us because you do recognize that staying on top of your receivables is a crucial component right now for keeping you afloat during a time when sales may very likely be down. Dan and I, being Denver folk, absolutely love this industry, and we really just want to see the brands that we've grown up using survive to see the other side of this crisis. So as I mentioned, there's no blanket solution here, but we did put together some important things that you should consider. So putting yourself in the perspective of your customer, right now every business is going through their list of payables and they're making decisions. Maybe your company is even doing the same. There's a choice to be made right now between who's business essential and who they can get away with pushing out a few more months. So more than likely you're being told by your customers that they absolutely have no money to pay your invoice. In collections, I always like to tell my clients to ask themselves this: does this customer truly have absolutely no money, or are they just saying that they have no money for you? I've found that many times this line can be an exaggeration used by the opportunistic to buy themselves some time. It's the ugly truth. But I've also found that through a lot of the research I've done for my clients, several of these companies that are claiming now they have no ability to pay have actually been struggling for months prior to this. And this pandemic is unfortunately just a conveniently timed excuse for them. So my advice is this: beware of the opportunistic. I think everybody on this call, including Dan and myself, really try and think the best of everyone, but I do want to ensure that those who are being given a really generous break, really long extended terms, are truly worthy of it. And we'll touch on some things that you can do to make that determination. Something else to consider is that many businesses have put a complete hold on calling their past due AR, likely because the collection staff has been furloughed or because they don't want to ruffle any feathers. But if your team is fortunate enough to have the resources right now to keep your collection calls and your email campaigns going, I strongly, strongly encourage that you do so, because you will be the most likely to get paid from a debtor's limited resources if you are on the top of their mind. It's kind of that squeaky wheel scenario, if you will. Also, if you have the budget for it, you could always consider some temporary third-party assistance with AR staffing, hiring a temp. If you were interested in that, please reach out to Dan and I. We could always point you in the right direction there. So I'll sound like a broken record here, but I'm going to keep saying it. Now is the time to be proactive. It is not the time to take a back seat and hope that things get better. Typically, things do get worse before they get better. So I really do recommend that you take this time to put yourselves in the absolute best position for recovering on your invoices. There's a couple things that you can do to mitigate the risk that you're taking on your new customers that are being given exceptionally extended payment plans right now. So the first, in my opinion, the most important would be pull a detailed credit report on the customers that you have that are asking for extended terms. By doing this, you can pretty easily establish if there was already a pattern of delinquency pre-COVID. Were other vendors reporting them as 90 or 120 days past their terms well before this pandemic? You're going to want to keep an eye on those. Another great resource is your competitors, the other vendors in your industry. I always like to refer to the outdoor industry as a family because in my experience, everyone is willing to share their feedback to help out a fellow brand. Talk to your competitors, use that resource. Are they being paid? Are they getting a different story, or are they hearing the same thing that the customer is telling you? A wonderful resource for that is Reamer Plus. They've got some fantastic specific industry trade group meetings, and it's a really good resource for that. Another option here would be just turn the lens in-house. Take a detailed list of your own prior payment history with this customer. Were they always slow to remit to you even well before this, or have they always paid on time up to this very abrupt point? Again, payment trends that are dated prior to March 2020 are going to indicate whether this is new or ongoing, and that should definitely weigh in on your decisions on whether or not to work with a customer. Lastly here, if you are dealing with a specifically large balance or a very high level of exposure, it's not out of the question to request perhaps a signed promissory note, which is inclusive of a personal guarantee. I'm sure most of you know this, but if this particular retailer that owes you money doesn't make it to the other side of this pandemic and they close down, it's a very harsh reality. You're not going to have any recourse to collect that unless you do have a signed personal guarantee on the debt. So as I mentioned, we understand there are those who are truly, truly suffering as a result solely of what happened here, and we do feel for them. But there are also those who are struggling already and are just using this as a crutch for you to essentially supply them with an interest-free loan. So it's worth mentioning that for some of you, especially those in the snow sports, this is an excellent snow season up to the mountain closures, which was in fact late season. So a lot of those customers should have experienced great sales up to that point and should have the cash reserves to pay you. You need to make your determination on whether or not to work with them just based on data rather than taking their word for it. And the next few slides will show you the type of information to be on the lookout for. All right. So I went ahead and pulled one of Altus's credit reports on a well-known retailer, Dick's Sporting Goods. I'm sure you're all familiar with them, just to give you some recommendations on patterns to be aware of. So the data on this report is actually a combination of what Dun & Bradstreet and Experian have reported, but I really believe keeping a clear line of sight on your customers' financial stability right now is going to be crucial in your decision-making. So the same way that you would pull a credit report on a brand new customer looking for credit terms, I would recommend also implementing pulling reports on any customers that are asking for extended terms or payment plans due to COVID restricting their ability to pay. We have to face the music here. The business that you sold to 6 months ago is likely a completely different company now. So you need to make sure that they are still a reasonable credit risk so that you can make a calculated decision concerning your exposure. So a couple of things here. I recommend paying specific attention to the monthly breakdown of payment trends. As I mentioned before, you want to see whether this customer is historically delinquent in paying their other creditors, at least based on what's reported, or if this is a fairly new occurrence. So in this case, we do see a fairly regular pattern of paying on time and only a pretty recent dip in payment trends as of May and June. Another thing to be aware of is just the date of any derogatory reporting on there. So derogatories are going to be your judgments, your tax liens, things that indicate a company is having a hard time. Is there a concentration of brand new collections reported or judgments or tax liens that were filed recently, or have they been building up for all of 2020? On this particular report, it looks like there are several derogatory items, which honestly can be expected for a company of significant size, but I do recommend that you keep a close eye on these as they very well may continue to increase. We do have several clients that have been asking about this particular retailer, so I have a full copy of this extensive credit report, and I would be happy to share it with you guys free of charge. Just after the webinar, shoot Dan or I an email, and we can send you that full report. So we're a collection agency, and given this crisis, we were actually expecting revenues to be down between 35 and 40% for March and April. But we were actually able to hit our originally forecasted goal. This is not to brag about how incredible we are, but really to show that the reason we were able to do this was by being fluid, adapting our methods, and exercising compassion and empathy. We have a responsibility to our clients to collect their money, and you have a responsibility to your company to collect on your invoices. Do everything possible you can to adapt to this climate. Let your debtors know that you're here to work with them, and it truly does go a long way. Collection agencies can often be the last people a debtor wants to pay. So if we've had such great success with this method, I am absolutely certain that your team is going to as well. Really just let your customers know that you're here for them, even if it means offering a helping hand to guide them towards some of the government assistance options. There is nothing like a global pandemic here to make you realize that we really are all in this together. And I do think your customers will appreciate that. I know that some of these funds have already been used up, and thankfully I know a lot of your retailers have already been able to reopen since this was launched, but it doesn't hurt just to pass along a little bit of guidance. Again, it just shows that you care and that you're working with them as a team. So lastly here, our collectors put together some templates to entice our debtors to communicate, and I definitely think these methods would be useful for you as well. So we've actually been directing debtors to SBA loan resources, and in some cases, we have even walked them through the application process, a little bit of hand-holding there. And we also incentivize them to communicate by offering settlements or payment plans. So if you guys are comfortable with that, definitely be explicit about it. Let your customers know, and perhaps that'll be enough to get them to come to the table. So feel free to use this template, or you could, of course, reach out to us directly for any suggestions. We're happy to share that. But sometimes just extending that helping hand is enough to get a debtor who is otherwise not communicating with you at all to come out of their shell. I think just showing that you care puts you on a fast track to the top of their list of vendors to pay, because I know that list is long. And something tells me that exercising empathy is not going to be a difficult task for this incredible group.
So I'll just introduce myself real quick. My name is Dan Grenemeyer. I've been with Altus for about 14 years, and I work with Leah specifically to handle the outdoor industry clients that we have. So I wanted to just talk a little bit about kind of preparing for a changed world. So we've all probably formed opinions over the last 3 months about the virus itself, about the government's response to it, and whether we like it or not, whether we agree with the way things are handled or not, the truth is we probably all agree that the world has changed. So I'd like to look at some strategies to analyze, forecast, and manage risk in these uncertain times. Our opinion, Lee and I's opinion of this, is that the outdoor industry is probably better positioned to handle this. The reason is you're used to handling seasonality. You're used to dry snow seasons, mudslides, things that acts of God that create a barrier to do business. So we hope that on the other side of this, the outdoor industry comes out of it stronger than other industries because of that kind of planning that you've had to do for years, just as part of being part of the industry. And we believe that trust and the deepest relationships can be built in the most difficult times. So we're going to talk a little bit about interfacing with your customers and how to kind of predict and analyze risk in these times. So when we look at contacting a customer who owes you money, each company's got to make their own business decision on their policies and how they're going to approach companies during this time. Like Leah mentioned earlier, there are going to be some companies that decide to just wait it out and see what happens with their customers. The risk with that is not contacting a customer could mean that while you're kind of giving them a break and giving them an interest-free loan, their other creditors are contacting them. So whatever funds that they have, those creditors who are in regular contact are going to get them. So what Altus recommends that you do is maintain regular contact, steady, friendly reminders that the balance is due, while being sensitive and aware of the challenges that they're facing. In return, a company that owes you money should communicate their plan for continued operation, reopening, and repayment. Especially during these times, communication is vital. I know there may even be some retailers on this call that are trying to figure out how to get through this time, and I would just encourage you, maintain communication. Companies are going to be a lot more willing to work with you if you stay in contact, you let them know what's going on. Right now we're able to do curbside. We hope in a month that we'll be able to have people back in our store. We know that jurisdictions vary a lot based on where companies are located. So some companies may be further along in the process, and it's just really important that you communicate that to the creditors that you owe, and just maintain regular contact with them and let them know what's going on. This next subject is difficult to discuss, and it does require some sensitivity, but what do you do when you notice a customer's payment trends are declining and maybe the communication we talked about earlier is deteriorating? This slide gives you kind of an outline of common occurrences we see as a company's cash flow worsens. Stage one is basically where they hope things are going to be okay. They may ask for a payment plan. They may even get a credit card and be able to start paying down some of their bills. But if things continue, the cash flow worsens, they start to go into survival mode. So this is kind of the wheel and deal mode, the rob Peter to pay Paul. Maybe they claim defective product. Maybe they send you a check and it's declined. Maybe you hear that somebody else has to approve payments now. This is really the time when they start having to pick and choose who they pay. You may also see increased credit scores. Risk factors in their credit scores. You may see collection claims. You may hear industry rumors. So this is really stage two is basically your last chance to get paid. We hope that companies will get an influx of cash and come out of it, and sometimes they do, sometimes we don't. We'll talk a little bit about how that looks over time in a minute. But stage 3 is really where they're out of business. The flies are buzzing. They've closed the business. You may hear they may have even sold some of their assets to a larger company who wants their customer base. So this just kind of gives you an overview. You know, if you're seeing things in stage 3, it's probably time to take action, and whether that's with us, an attorney, another agency. We just don't want you to get burned. We're not saying you have to use Altus, but if you did, you know, that the later stage 2, and especially if they're in stage 3, that's the time to use an outside agency. So the next slide I'm going to talk about is a little bit about prioritizing your internal team's time. So we recommend a strategy that prioritizes campaigns based on risk. So most of your AR employees are probably stretched pretty thin right now, balancing working remotely. Some of them may even be homeschooling kids that aren't in school. So a concise strategy with collection efforts is more important than ever. So we're going to look at risk based on 3 factors. Exposure, that just simply means the balance that they owe you. Time, and that's the amount of time that they've owed you, and then the known credit and trade risks. So these are mostly going to be credit reports, credit scores, but they can also be if you go to an industry trade group and you're hearing that a company's having problems, or you're hearing rumors that they may be going out of business. So what the risk-based strategy is going to allow you to do is make a call at the right time, and that can make a difference between you being paid and you being put back to the bottom of the stack. You're going to make yourself a priority. You're going to know sooner about problems, and you're going to be more proactive versus being reactive and not doing anything until we see a bankruptcy notice or you notice that they're really far past due. So this is just kind of a general, this is an Excel spreadsheet that we actually did for another client. So you can go to whoever you use for your credit data, or you can come to us. This particular spreadsheet is free. We can do it free of charge. And what it's going to show you is you can actually, if this were a live spreadsheet, you can sort by the balance that they owe you. This particular one is sorted by 91 plus. You can also sort by credit score, risk class. Column K is what percentage is over 90. So that looks at, you know, this customer, all of their balance is over 90. They're not buying from me anymore. They've got a big balance. So that's going to be an indicator. Maybe they vendor hopped to another brand that's similar, and they're getting their product there. And then from there, you can look at judgments, lien balances, collection claims, and it actually keeps going. So this is something you should be able to ask for from whoever you're currently using for credit reports. And again, it's a free offer to anybody on the call. If you'd like us to do this for you, we'd be glad to. But basically, the way you use this is once you have it, your staff can go in. They can sort by who has the biggest balance over 90 days, and then they can base their day on the most impactful calls, the most impactful emails, and hopefully get some of the larger balances, or those that have been due for a long time, or those that have high-risk credit scores, that they're using their time to make contact with those customers and try to recover the money. So talking a little bit about age of account, this particular slide shows what happens over time. So this was done by the Commercial Law League of America. They kind of govern collection agencies. So it's not an Altus thing. It's from the Commercial Law League. But if you look at, you know, at the due date, about 95% of accounts will pay. If you wait 30 days, you're looking at almost 90%. If you bring that out to 6 months, your chances of collecting are cut in about half. So about 52% of accounts will pay if they're already 6 months past due. As you get into a year, you're just better than 20%, 2 years, 9.3%. So it's important to keep this in mind, because what happens as time goes on is those companies, they start going to stage 2 or stage 3. And obviously if they're in stage 3 and it's 2 years out, you know, that's why the chances are so low there. So just keep in mind, the longer that you wait, the less chance you're going to have to recover, and the more likely that account's going to go to bad debt. So now, if anybody hasn't already submitted your questions, please do. Leah and I are happy to take them. We're going to take them live, and we're gonna answer them. I'm also going to put up our contact information. If for some reason you're not comfortable asking it through the format, you can call us or email us, and we'll be happy to help. But please send us your questions. We've got a few that have come through as we've been going, so we're going to answer those, and then we'll answer any new ones that come up as well. So thank you.
All right. Well, one thing that I have received from several of my clients actually is, and it's a very relevant question right now, what if I can't get a hold of anybody at a company that I'm trying to collect from? It's a valid concern. You've got an invoice that needs to be recovered and you need to be able to speak with someone. The first thing I would recommend is probably just refer back to your original credit application when that company came on board as a customer. More often than not, you will usually find a direct line or an email, or at very minimum, the name of a principal of the company or perhaps the owner, even if that's not your day-to-day point of contact. So keep in mind as you're making your calls that a lot of these AP employees have been furloughed right now. So you definitely do need to direct your efforts towards officers of the company. And another really good resource, we use it all the time as well, is the Secretary of State website for the state that your debtor is located in. So almost every state offers a free public database. It's called usually the business search. So if you just go to the SOS website and then navigate to the business search, you will actually be able to find the registered agent's address, their name, and obviously, again, you just want to focus on people that own the company because they're going to be the ones that are most likely working and trying to keep things afloat right now, and more importantly, they're the ones who can cut a check.
All right. Well, we just had another question come in. It says, do you find dunning letters a good strategy for collections? And this would be an emphatic yes for me. I think it's very important that that you send dunning letters, but I also think it's important that they be followed up with phone calls. So the way that we've found that works best, we actually have a program called CARE that makes early collection calls and sends letters. And the way that that's structured, what we found after a lot of testing is that each letter that we send should be followed by 3 phone calls. So that's ideally how we would approach that is, yes, send your dunning letters, but if you're not getting a response, don't assume that they've received them, especially right now. Somebody may have been furloughed who did payables, for example. So you want to make sure that you call, and that what we would recommend is that you at least document a promise. So if for some reason the person that you get a hold of in AP, let's say they don't have the authority to cut the check, you'd at least want to say, well, can you get me in touch with somebody who can, or can you tell me when that will be cut? And if you're able to kind of stage a date for your next call, that's really important. And then there's something in the notes saying, I spoke to so-and-so on this day, they're going to pay by X day, so that when you follow back up, hey, when we spoke in May, you said that by June 15th, you'd be able to pay this. Has the check gone out? So we do find dunning letters, they're crucial, but they also need to be followed up on by calls.
All right, another question came in here. How would you recommend approaching competitors for information on past due customers, and how would we know who to call? Awesome question. We live in a great age of technology and e-commerce, so it is easier now more than ever to determine who your customers' other vendors are, because you just pop on their website. You can see what brands they're carrying, and maybe if there's a specific concentration of any particular brand. I would recommend you call the corporate office and just ask for the AR manager or the controller, and be honest about the intention that you have for your call. Dan and I also, through our work with the outdoor industry, know hundreds of finance professionals in your industry. So if you ever need help, seriously, just let us know. They, more often than not, are already an Altus client. So we can direct you who to talk to, or we can call them ourselves and do a little recon for you. But really, the same way that they would field a reference request, I'm sure that they would be absolutely open to telling you whether this customer is a habitual problem for them or if they're all paid up. And obviously, the answer that you receive is going to give you some pretty incredible insight on where you stand with the customer, because if you're the only one not getting paid, if you've called several other vendors that have no issues, you know that that's a problem. All right. Yep, we've got one more question it looks like we've got time for. So what if the customer applied for the government assistance packages and was denied? Ooh, that is a good one. It's tough. Honestly, I'll be the first person to say it felt like the system was a little bit rigged to favor some of these huge corporate bailouts, and a lot of the little guys who are many of your customers, small retailers, were kind of left stranded. So, I mean, I guess just for the sake of accountability, I would ask for proof of the denial just to cover your bases. And then perhaps look at having them sign a promissory note for an extended payment plan, maybe weekly or biweekly installments that you can guarantee are going to come in. You could also ask them for post-dated checks to cash at a later date, maybe, starting next month. You can have one for the end of each month. I definitely have found in my experience that companies are pretty willing to provide these if they don't have any other option. And usually the ones that do, you can rest assured have very genuine intent to resolve. So try and get that personal guarantee if you can, explain why you need it, and just be really open and transparent with your customers. And, I'm sure that they would understand that you're just trying to protect your company's interests, and obviously while still giving them the most flexible payment options possible. I think they'll really appreciate that. All right, do we have any more?
I think we answered all the questions. Nobody else has any. Well, if you have any, pop them up real quick and we'll try to answer them. But otherwise, thank you all so much for your time. If you think of a question, give us a call. We're always happy to take your call. We love talking to people in the industry. So our phone numbers are up there, and we forgot to put our emails, but they'd just be Dan Grenemeyer at trustaltus.com or Leah Sky at trustaltus.com. So please reach out if you think of anything, and we hope this sets you up to kind of go back and approach your AR. And if you need anything or have any questions, just let us know.
Yeah, and thank you again to OIA, of course. We're grateful for this opportunity and to be a part of this amazing group. And to all attendees, just so you know, OIA will be sending out a link to this session in the next few weeks. So just keep an eye on your email and you should have that. And as Dan mentioned, any questions whatsoever, we're an open book and we're happy to talk with you. So thanks again for joining us this afternoon. Have a great day.
Thank you all.